Heya Cryptozens. Tonight's show. Will Helium jump to Solana? CFTC and SEC seek public comment. And Cali's crypto licensing bill. It's 10 p.m. Pacific, and the date is September 1st, 2022. Welcome back to the Crypto Overnighter. My name is Nikodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex. And together, we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. And keep in mind, nothing in this show should ever be considered financial advice. Helium has been having a rough time of late. It's still in the top 10 coins by market cap, but it's down bad and getting worse. 11% in the last 24 hours, 32% in the last week, and 47% in the last month. This is in comparison to both Bitcoin and Ethereum, which have had modest gains over the last week. And there's been some issues. Helium was rocked by controversy in the last couple of months. It appears that they did a thing you hear about young, newbie projects doing. They apparently claimed a couple of companies as partners. Salesforce, which is a giant in the cloud software field, and a scooter startup, Lime. So Helium claimed partnership with them. And both of these companies say such a partnership isn't real. But in both of these cases, Helium had these companies' logos up on their website as partners. And it just wasn't true. Now let's take a minute and talk about Helium itself. Helium is a blockchain network. It's kind of a utility network. It powers wireless communications. In fact, you mine Helium by providing what's called proof of coverage. That's instead of proof of work or proof of stake. Thousands of individual users provide an access point to the internet. These use a medium-range hotspot to hook into Helium's network. So you get on the network and give some of your home internet service. Now, HNT is the token for that blockchain. And as you've no doubt guessed, HNT is the reward you get for setting up one of their mining devices on their network. They recently launched a 5G network. This one has more than 3,000 node operators/miners so far. They said their plan is to launch a network of networks, individual tokens as a reward for each protocol. Now, the devs from Helium Foundation, now they want to move it all. The whole thing, kit and caboodle. They want to move Helium off of the Helium blockchain and onto Solana. Which, isn't as weird as it sounds, for reasons I'll get into in just a minute. But first, let's talk about why they want to make this move. Technical issues, performance. So all of this is written up in Helium Improvement Proposal number 70. In that proposal, the developers wrote, quote, "In the last several months of the network, both have been challenging for network participants with much reduced proof of coverage activity due to network size and blockchain validator load and packet delivery issues." So what they're trying to do is boost data transfer speeds and improve network coverage. Now, if this proposal passes, HNT, IoT, and mobile tokens and data credits, these would all be transferred over to the Solana blockchain. And that kind of gives you a feel for that network of networks approach. See, HNT is the coin for the blockchain. IoT is earned by node operators that provide the network. Mobile is what you earn with 5G coverage. And DCs are used to pay transaction fees. So right there, that's 4 tokens for this whole thing. Seems like a lot. And also, it sounds like the proof of coverage mechanism is just a pain to manage. The developers feel that scrapping proof of coverage for consensus would make it much simpler. So here's why it's not so crazy. Helium just wants to provide a service. They're not a fintech company. They're not a liquidity provider. They're not running an exchange. They just want to provide internet coverage to people and reward those who contribute. They don't have to run their own blockchain to do that. I know it's fashionable to set up your own token for a Web3 service, but it's not required. Isn't this what we want eventually? Apps setting up on already existing blockchains to do their work. I mean, do we really want a world where every single little service has its own blockchain and its own token? Of course not. That doesn't make any sense. What does make sense is to use the tools that are already available instead of reinventing the wheel. Because setting up your own blockchain is so much more work. And honestly, it's a whole lot riskier, isn't it? Now, design and set up your service to run on someone else's blockchain and let them deal with the headaches. Now, back in 2013, when Helium got started, they ran their own blockchain. At the time, they felt that they had to, that the blockchain choices available just weren't all that appealing. They felt that Ethereum, for example, was too slow, and then the other alternatives just didn't suit their needs. Anyway, it doesn't seem to be what investors were feeling, because the market recoiled at the suggestion that Helium leave its own blockchain and take up residence on Solana. Recoiled sharply. 15.5% drop in 48 hours. Now, of course, questions have been raised about Solana's stability. They've had a lot of network issues lately. Unlike some applications, a service powering wireless networks just can't have its backbone going down. Now, of course, Solana's stability has improved after a series of upgrades, but that's not what's on investors' minds. The reaction has not been all bad. Ryan Bethencourt is a partner at Layer 1 Ventures. Now, he got on Twitter and he told his followers that the proposal is huge for both Helium and Solana and that it should be approved. And there's some built-in synergy going on here. Last February, Helium went through a Series D funding round. That gave him a $1.2 billion valuation. Now, this funding round was led by Tiger Global and FTX Ventures, as well as Multicoin Capital and A16Z. These same firms also invested millions in the Solana ecosystem. So there is that. The top 5 cryptos by market cap are Bitcoin down 0.1%, Ethereum up 0.11%, Tether, USDC, and Binance Coin down 1.61%. So, if you have feelings about Form PF and whether regulators should use the term crypto asset or digital asset, then the government wants to hear from you. Okay, that's a little misleading, but it's still true. Here's what I'm talking about. The U.S. Securities Exchange Commission and the Commodity Futures Trading Commission are looking for feedback. They've called for comments on this proposal. Now, this proposal requires large advisors to certain hedge funds. They have to report exposure to crypto. The Federal Register got a joint proposal put in today. And that proposed rule establishes a 40-day comment period for amendments to this Form PF. Okay, so what is Form PF? Form PF is a document that's supposed to stay confidential. It is required of certain investment advisors for private funds that have at least $500 million. This proposal sets out requirements for these hedge funds. If you meet the requirements, then you have to report exposure to crypto in a different category. It won't be in the cash and cash equivalents category for that case anymore. Now, right now, crypto is not even mentioned, and that would change with this proposal. There would be a definition of the term digital assets. See, I was serious about the digital versus crypto thing. That's in there too. And what it means is that they could potentially require those hedge funds to report earnings back on investments in different categories like virtual currencies, coins, tokens. So they're asking the public whether they should be called crypto asset or digital asset. In the proposal, they explain why. They said, quote, "We view these terms as synonyms. We are proposing the term and the definition to be consistent with the SEC's recent statement on digital assets, and we believe that such term and definition would provide a consistent understanding of the type of assets we intend to address." Now, I am a big fan of that. Get those definitions out there early, let us fight about them, and then we can finally move on. Consistency, in this case, really is the holy grail. Now, when they're making the case for this, they claim that this proposal could allow investors to make better, more detailed information on strategies as well as exposure to different assets. This information could then be used by the Financial Stability Oversight Council to get a better handle on the potential risks to the economy. So they've opened this whole thing up for comments until October 11th. You have until then to make your opinion known. Crypto versus digital, and that other stuff too, I guess. The global NFT market cap is down 2.61%. Sales volume is down 8.16% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Women Ape Yacht Club, Clone X, Other Deed, Bored Apes, and Mutant Apes. Now keep in mind, some of these collections have very volatile prices, so make sure you do your own research. California is poised to be one of the first states to require crypto-related businesses to get a special license. Timothy Grayson is a California Assembly member, and he introduced the bill AB 2269. It's called the Digital Financial Assets Law, and it enjoyed support from the Consumer Federation of California. Now, the purpose of this law comes from a press release. In that press release, Grayson says that AB 2269 is there to protect citizens from, quote, financial hardship and foster responsible innovation by licensing and regulating the activities of cryptocurrency exchanges. And like a lot of professional licenses, they're there for consumer protection. Grayson said that these kind of licenses, quote, act in the best interest of a customer when it recommends a cryptocurrency. And so it came to pass that the California Senate approved the Digital Financial Assets Law, and that approval means that it's destined for the desk of Gavin Newsom. From there, he's either going to sign it into law or kick it back down to the Assembly. Now, as stated, the goal of this bill is to protect citizens from bad actors in the space, which, to be fair, there's a lot of bad actors. So I get the desire to help people and avoid getting wrecked. Grayson, he talks about that in the press release. He said, quote, while the newness of cryptocurrency is part of what makes investing exciting, it also makes it riskier for consumers because cryptocurrency businesses are not adequately regulated and do not have to follow many of the same rules that apply to everyone else. So from Grayson's point of view, this bill will protect citizens and promote a healthy market. The bill requires exchanges and crypto companies to get a license. This license comes from the Department of Financial Protection and Innovation, so there's that angle. If you don't have a license, you don't get to operate in California. Fail to follow the law, and that could result in civil penalties. And they're talking about up to $100,000 per day. Robert Harrell is the executive director of the previously mentioned Consumer Federation of America. Now, remember, they helped to support the bill to get to this stage. They said, quote, fortune favors the balanced and wise, not just the so-called brave. Hundreds of billions in self-promotion from the crypto industry shouldn't overshadow the need for solid consumer protection. Now, on the other side of the fence, you have the Blockchain Association. They're not fans of this legislation. They said that this bill will stifle innovation, that it creates short-sighted restrictions, and that those restrictions are, in fact, inconsistent with what the governor's stated vision is, at least in terms of crypto in California. Now, from their official Twitter account, the Blockchain Association said, quote, the bill's licensing provisions are designed to install the same type of onerous licensing and reporting regime that has stunted the growth of the crypto industry and limited access to safe and reliable crypto products and services in New York. Now, this law would take the place of California's Money Transmission Act. That act says that you have to have a license from that same Department of Financial Protection and Innovation. At present, I can't predict which way Newsom's going to go on this. He has until September 30th to decide. Now, back in May, he signed an executive order meant to align the federal and state regulatory frameworks. The problem is, there just isn't all that much to the federal side of things. So that means that Cali just kind of has to wait for guidance. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. Take care of yourselves, but take care of each other too. We'll see you tomorrow night.